Hello again, this is Nick Stramick and Howard Chao, founders of Doon Insights, with our podcast, What's Next In? And today we're looking again at auto tech. So Howard recently sat down with the founder of WattEV, Salim, and for an interview about their company ahead of our workshop last fall. So Howard, what do you think about WattEV?
I think it's a very ambitious but very interesting project. You know, they're trying to set up the infrastructure for electrification of trucks and commercial trucks, and they're putting in a lot of capital into the ground to do this. There are going to be operators too, and so it's a big project, but sometimes bigs means you gain a competitive advantage, and so you'll hear more about this in this interview.
Sounds good. All right, let's get right into it. This is Howard speaking with Salim, the founder of WattEV.
Today, I have the pleasure of being with Salim Youssefzadeh, and then also my friend Bill Russo. Salim is the CEO of WattEV, and Bill Russo is the head of Automobility Limited, which is a leading firm based in Shanghai. So before we get into a interview with WattEV, maybe I can just ask Bill quickly to self-introduce and tell us a little bit about what he does.
Sure, Howard. Thanks again for inviting myself and one of our portfolio companies is WattEV. Automobility, based in Shanghai, we're a strategy and investment advisory firm that helps clients build and profit from the future of mobility. So we're looking to curate interesting technologies that can commercialize and scale in the world's largest mobility markets. Mobility is obviously a function of many factors. Obviously, human population centers drive mobility, human demand for movement, and that's concentrated in large part in East Asia. That's why we're based here. We look at the market globally, but we are also focused on where to commercialize in places like East Asia, where we have huge populations. One of the areas of interest for us is in electrification, obviously, in all form factors of mobility. And one of the chief areas of concern for carbon-based emissions is heavy-duty trucks. Heavy-duty trucks obviously have the high carbon footprint in terms of their in-service use case. So we look for electrification and I'd say all forms of new energy vehicle technologies in the heavy-duty truck segment is an area of opportunity. That's what brought us to focus on this particular startup. We have seen over the course of the last decade the beginning stages, now the acceleration of the commercialization of electric vehicles for passenger cars. We think obviously the next wave will be in the larger form factor heavy duty category. One of the characteristics that drove the commercialization of EVs for passenger cars was the creation of the infrastructure. In particular, Tesla with the supercharger network de-risked the purchase of EVs for individual owners by making it convenient to operate an EV. We think a similar development needs to occur on the heavy-duty trucks. Heavy-duty trucks actually has a couple of characteristics. One is you need to keep the truck moving. Its productive life depends on its frequent movement. So you need to charge quickly, and you need to have availability of charging in multiple locations. And WattEV is a company that's providing solutions in both of those categories. We think in the US in particular, fast charging, high voltage, fast charging will be one of the areas that will be of interest. Obviously, there's another school of thinking that says it might be hydrogen fuel cell that keeps the trucks moving and lowers their carbon footprint, but that also has huge infrastructure costs. But WattEV in particular, starting in California with the backing of the California government and other agencies, we think has a high probability chance of being the commercialization partner for the commercial truck industry. So that's why we focused on them. And again, happy to be here, happy to introduce this company to you.
Terrific. Thanks for that, Bill. So let's turn to the company and to Salim. So So let's start at the beginning and tell us the beginning. Where did your company come from? How did it get started? And also tell us a little bit about your background personally.
Of course, yeah. So first of all, Howard and Bill, thanks so much for having me on and for that introduction. Great to be here, and happy to tell you all about WattEV and where we started and where we're going. And Bill, I think you hit the nail on the head when you said you can't have one without the other. I mean, on one side, we can't build the infrastructure and expect to have the trucks, the demand for the trucks, and on the other side, you can't really have trucks on the road without the infrastructure. And so when WattEV started about 2 years ago, we looked at both the infrastructure portion as well as on the truck portion to see what needs to be done to bridge that gap to have both the infrastructure in a reliable way, as well as the trucks that is affordable and economical to the owner operators that make up a big portion of that industry. And so when we first started, we looked at the infrastructure portion and what needs to be done. On one side, we know that you can't have one site that's entirely dependent on the grid, or one site that is in one location without having a full network. So we started off with California because of the mandates and incentives that are around it, and looked at the market that has a big portion of that traffic. So if you look at the Southern California region, you have 30% of the US goods coming in from the Port of Long Beach and LA. And then a big portion of that actually goes between the ports and Inland Empire, or going from the ports to Northern California. So we started looking at sites strategically located in those areas. And right now we have 3 sites that are in development, one in Bakersfield, one in Long Beach, and one in the Inland Empires. And using those 3 sites as the first 3 sites to be in operation next year, we can start running electric trucks between those facilities to show that zero emissions transport is both feasible and economical. On the infrastructure portion, some of those sites would be entirely tied to the utilities, and some of those we have the ability to deploy distributed energy resources like solar and battery storage to really become more independent from the grid and to drive down the cost of the utilities, or the cost of energy. And then on the vehicle side of things, really what we started looking at there was the barriers that stop people from going in and purchasing those vehicles. And when you look at the cost of an electric truck on its own, that alone is enough to scare away most of the owner operators and some of the transporters. So in most cases, a brand new electric Class 8 truck is about 3 to 4 times that of a new diesel truck. Then you couple that with the unknown range, maintenance, insurance, and so forth. And there's plenty of factors that are stopping people from adopting zero emissions transport. So at WattEV, we took this more as an opportunity to how we can bridge that gap. And we introduced the truck as a service concept that allows us to offer a full service lease of the vehicle, inclusive of the charging, the maintenance, and partial insurance, all at a price that's nearly at par with diesel. And we actually have 50 trucks, Volvo trucks, that will be delivered to us at the beginning of next quarter that will be running between those 3 facilities. And then our expansion plan is to go up towards Northern California, as well as eastbound into states that are adopting similar mandates and incentives to California, as well as following those major trucking corridors. I myself come from mostly a tech background, so not from the transportation industry at all. Started off with software and MBA as well, but we've really staffed up and hired to fill in those gaps where we needed expertise on the transportation side. So our board of advisors is made up of many industry professionals on the transport side, on the software side, as well as financing side. And then the team has grown tremendously. I couldn't be happier for our team that we have now. We've got well over 30 people covering on the software, on the operations, and transport. So we've staffed up heavily and got a lot of work to do still, but have a lot of momentum moving forward.
Tell us, what do you think are your primary competitive advantages in doing this, and what are the chief challenges?
Sure. So yeah, so as you mentioned in the question, there's quite a lot of different elements in play. On one side, you have the high cost of capital of the assets, as well as the infrastructure, high cost of capital. And then on the other portion, you have the customers, whether it's the shippers or the transporters, and then you have that software play. So we've got a couple of advantages that are working for us. On one, we're the first to market. So we have that first mover advantage of choosing those locations. Port of Long Beach being one of them. I mean, it's crucial to have a site right in the port complex, being able to handle a lot of those loads. And then our Bakersfield site, which is our flagship site, that's a 115-acre property, of which we're demonstrating 100 acres of solar at full scale, which would be able to charge well over 200 trucks per day once it's fully deployed. But on the capital side of things, we try to stay fairly capital light where possible. So we're tapping into grants wherever we can, and we've been very successful doing so. So all of the sites that we have, as well as the vehicles, have some sort of funding tied to them, whether it's state grants or federal grants. And then on the customer side of things, to continue on the infrastructure side, rather than purchasing those sites, we try to enter into long-term leases. So some of those locations are city-owned, some of those are privately owned. But wherever possible, we save capital and deploy it just on the infrastructure alone rather than on the properties, and enter into long-term leases on those properties with options to extend or to purchase. On the vehicle side of things as well, we try to do financing rather than paying all that capital ourselves, and that way we can sort of spread out the payments over long term. Then it comes to our customers, and for a lot of those shippers, they have their own sustainability goals and mandates. And our pitch to them is to go to those shippers like the Walmarts and Amazons, pitch them on the sustainability and how they can meet their sustainability goals without any upfront costs, and essentially take contracts for those routes that they have and put it on the WattEV platform, which then allows us to move those loads using zero emissions trucks. And then it comes down to who's operating those vehicles. So, and WattEV has its own WattEV transport company with its own DOT license and MC number. And for the first few trucks that we get, we'll be actually operating those with our own employee drivers so that we can test our software as we scale it up. But really a big portion of that will be the owner operators and smaller transporters that are operating those vehicles. And we enter into a full service lease agreement with those customers of the vehicle, all inclusive of the maintenance, insurance, the asset itself, as well as partial insurance and the charging. What really ties all of this together is the software that we're putting in place. So the software plays a big role of guaranteeing that that owner operator, the infrastructure portion is there so the truck doesn't break down, or what happens in case the truck breaks down, as well as to the shippers that need to show a summary dashboard of how much emissions they're saving by using zero emissions transport. So we cover that full package to both the shippers and the transporters and guarantee them reliable experience using zero emissions trucks.
Great. So tell us who your target customers are. What's the demographic of your customer base, and how much traction have you gotten?
Sure. So on the vehicle side of things, we've already entered into some contracts with transporters towards our full service lease agreement on the trucks. And then we are working with a lot of the name brand shippers as well towards getting long-term contracts for some of their loads so that they can put those loads on our platform and can move those using the zero emissions trucks.
And Salim, you mentioned that you have arrangements now with some transporters. Are there any competitors attempting to do anything similar to this?
There are some players that have come into the market recently, some that are focusing just on the infrastructure portion, and some that are coming and offering the truck as a lease as a service package now. But really what it comes down to is that first mover advantage and then being able to tap into a lot of the grants and incentives. And really in terms of the scalability, all of our sites are starting off with CCS charging, which is currently the fastest that's available today, which is about a 2 to 3 hour charge time on some of those Class 8 trucks that we have. But we're looking well beyond that towards scalability. And for us to go from the short and middle mile towards that long haul freight, we see MCS becoming a crucial part of that. So MCS, for a lot of those viewers that don't know, is megawatt charging standards that is introduced by an organization called Chao. And that's a new standard of connector, cooling types, battery voltages, and so forth, that it allows for much more rapid charge times. So a Class 8 truck that has MCS technology on it would be able to charge within 30 to 45 minutes. And so that becomes more acceptable to an owner operator where time is money for them and they need to be able to charge much faster. And a big portion of WattEV, one of the subsidiaries that we have, is actually focusing on that MCS technology, and not only being a supplier to that technology to WattEV, but to anybody in the market that's looking into getting that into that as well.
You mentioned, the uptime and the criticality of that, especially for commercial transport. There's been a lot of thought given to, what are the competing other technologies that might come in to compete with high fast charging EV. Have you guys looked at hydrogen?
We have,
and
yeah.
evaluated, and why did you settle on this particular?
Yeah, so actually, part of WattEV's origin was starting in hydrogen. And what we were looking at there was to produce green hydrogen through a process called electrolysis. But it's very energy intensive. But one of the biggest issues that we had, so at that time, what hydrogen offered was faster fuel times and reduced weight. But we realized that producing green hydrogen is fairly costly, and being able to transport it and store it in liquid cooled tanks is very expensive. As well as over time, hydrogen is a fairly corrosive material, so it starts eating away at the material that it's stored in. And then when we started looking at the electricity side of things, when we started looking at the EV space, we saw MCS starting to come into adoption at that point, and that offered that rapid charge time. And then as battery technology improves, we started seeing the reduction of weight as well. At that point, we switched back over to EV and rode that horse full forward. However, I do think that hydrogen still needs to be explored. There may be some cases where hydrogen does work and some that doesn't. But for us, our focus is mostly on the electric charging side of things. And then some of our facilities that may have excess power that's generated through solar, we are looking at other opportunities for co-location of hydrogen plants as well.
I noticed in your design you have a provision for solar generation as well for the energy supply side. Can you talk a little bit about how the demand acceleration for electric vehicles will impact energy, grid demand, and how that's going to be handled if we did scale up technology like this?
Sure. So if you look at the battery on the electric trucks, the Class 8 trucks, it's about 550 kilowatt hours, which is a fairly large amount of battery capacity. And being able to charge that takes a huge strain on the grids. And in many cases, they may not have that availability, or they have to go through substantial costs to upgrade those facilities. And that's where we started looking at Bakersfield as an island operation, where we can deploy solar as well as battery storage to become more independent of utilities. And this, on an average basis, on a blended basis, allows us to bring down our energy costs throughout all of our sites as well.
You're getting some support from obviously California likes to lead in terms of its initiatives in the zero emission category. It did that for EV. Wouldn't be talking about scaling EVs nationally or internationally the way we are if it wasn't for the ZED mandates coming from California. California is somewhat unique in that it provides public support for private industry in subsidizing the early stages of these types of technology programs. How is that working for you? Do you have support from the state government, and how is that currently?
Absolutely. So as mentioned earlier, all of our sites have some sort of funding tied to it. Bakersfield, we were awarded a $5 million grant through 2 different California Energy Commission grants. And then some of the other facilities are tapping into other available funding opportunities. But this allows us to really bring down that cost of capital initially at those sites. And then as technology improves, as costs come down with the scalability of the economics and so forth, we're able to drive down those costs further and become less tied to the grants and incentives out there.
So, Salim, can you cover finally your capital formation history and also what your plans are going forward? Who are your investors?
Sure. So we raised about $6 million last year through a Series C that was done by family offices and small investors. And then through various grant fundings, we were able to secure about 20 to 25 million in grant funding. So at that time, we have 6 million seed, 20 to 25 in grants, and then went through a small SAFE portion as well. And then are planning to go through a Series A for a much larger portion in the coming months. That along with a large DOE loan that we're looking at doing as well, a Department of Energy loan for about $280 million. So that allows us to not only build the first 3 sites, but to build over 50 sites starting within California and scaling up from there.